All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm just going to wait here for the thumbs up that we are off and rolling. All right, we're good. All right, fantastic. All righty. Market off to a slow start here this morning. We saw S&P futures fall here overnight, and there's several things I want to go out and take a look at here with you. But let's start with the challenge. No positions on the board right now. I did take Alibaba off yesterday into the close, just with what we talked about with the implied volatility increase, and it just didn't make sense anymore to hold the risk with with what the risk was, because very rarely are you in a call option and you may have more risk if the stock goes up than if the stock goes down. And that's what Alibaba was. It was one of those where, the stock is down today, and we see the option price down today. In fact, let me show you. Let's kind of continue on that theme here a little bit. I'll get a little sidetracked. Here's Alibaba, and the option is going for about $6 and about $6. Let's just say $6. The spread's pretty high, but let's just say $6. That's we'd get filled there. That's only $1.90 lower from our option entry price, and about $2 lower than yesterday. So the option has depreciated by 25% with the stock itself. Going down 3%. That's a very small move for the option. Well, what's happened? Well, we have seen more implied volatility come into it. The implied volatility has jumped up here to 45. It was 42 yesterday, so it's put on another 3 points. And so that is helping the option value. Now, this is one of those scenarios where if Alibaba were up $3 today and the implied volatility dropped down to about 38, we'd be looking at an option that was maybe close to the same price that it is right now. And we don't see that very often. It is fairly unusual, but we saw that, and we saw that come in, and we saw that come in pretty crazily yesterday. So just couldn't warrant the risk. Now, if Alibaba is able to hold on to 206 here today, hold on to this 205.71 level, that was the initial stop level, I may look to buy some. But we'll see how today plays out, because Alibaba does have a chance of triggering bearish on the challenge algorithm here today. We have a fresh downside 3-7 crossover. And so there is a chance that we see that. There's a chance that we see some bearish signals in quite a few things. If we look at the bearish scan, we can see that there are quite a few stocks on here. Now, this list is decreasing as the morning ticks on, but we have Netflix, Micron, Johnson & Johnson, just some of the normal candidates. A lot of these have seen upside crossovers this week, and they weren't bullish signals. Now we're seeing downside crossovers, and so we'll see. We'll see how they play out. But something like Alibaba, it's one of those where even if we get a downside trigger, am I going to be able to play it? Because it's one of those where the upside risk, where if Alibaba were to snap back and lose a bunch of implied volatility, the puts would absolutely get crushed. I mean, just crushed. And so we'll have to kind of see what the pricing looks like a little later on today and into the close, and see what what we can do for the challenge going into the weekend. But I wanted to take a look at this video and talk about the 3 charts that matter. I did something this morning. I've been watching the banks all week, as you know, and I've been watching J.P. Morgan. I've been watching Bank of America. I went out and bought some Bank of America this morning. I've been very good at sitting on my hands with Bank of America. I didn't buy it on the rallies this week and everything else. But this morning, I just couldn't resist anymore. And, just bought shares. The option prices are, but just bought shares. And, something where I don't know if it's the bottom. They that old saying, try to catch a falling knife, you're going to get cut. I could easily get cut and get cut pretty big. But Bank of America came into a spot where I've been looking and saying, all right, I'd love to pick some up here. It's back below a book value of 1. And yeah, there's a lot of reasons why it's down here. And, they're very valid reasons. But, I decided, all right, this is where I want to step in. And so I did. Why do I bring this up? Well, because to me in the market right now, there are 3 charts that matter. There are 3 charts that matter in a very big way. 2 charts, you'll probably go, okay, that makes sense. First chart here is Bank of America. And I think you can take JP Morgan. If the banks have bottomed, path of least resistance will be higher for the foreseeable future. If the banks have bottomed. So far, is there evidence that banks have bottomed? No, not really. Not really. Last Friday we had some monster volume on them, but that was also the last day of a month. And so today we're probably not going to have the same volume as last Friday on them. And a lot of times when you get that monster bottoming type volume, you go set a new low, but the new low is set on lower volume, and then the snapback. But, if banks have bottomed, so is the market. Kind of going along that theme, take a look at the TLT. This is something that is not in the challenge. I don't include the TLT into the challenge watch list simply because it's too choppy. It doesn't respond well to the ATR method for the challenge. So, yeah, we get triggers on it and signals on it at a pretty good pace. But applying the ATR method to it and to options on it just simply doesn't work over time. But here of late, we have seen the TLT move into a monster trend, and one of its biggest moves. And it's just one where if we come back and we take a look at this on a weekly basis, and we take a look, and this is showing us the last 5 years, this is one of the bigger moves in the TLT that we have seen. And, we have the TLT hitting new highs. And what's that doing? That is basically taking the yield curve and, flattening it some more. Here we are with an ultra flat yield curve with the low end way down, the back end, it's not inverted, but man, it's just not a pretty yield curve at all. And it's just one where a tough environment for banks to make money with that type of curve. But if the TLT is topped, the banks have probably bottomed. And a lot of times when you get a massive move like this, there's a little blow off the top. Is today some of that blow off the top? I think you can make an interesting argument that it is. That today is some of that blow off the top action. And so if we see TLT is top, we see that Bank of America or JP Morgan is bottom. Those are very bullish signs for the market. I can't sit here and say that they have. Is there a but that is about it there. Okay. All right. Looks like the stream cut out here. My apologies. All right. There we go. We're back. And so it's one where those are 2 charts I think very important right now. But the third chart probably not as watched by traders, but I think maybe the most important chart. And you've seen this before. This is the coronavirus mapping and tracking from Johns Hopkins University. You've seen me show this several times. If you want to find it, just put coronavirus Johns Hopkins map into Google, and it comes right up. But it's not this map showing the cases, here of the coronavirus, but it's this chart down here below. And it's in the bottom corner. And you see this top line. This is the number of cases in mainland China. And that's not the chart that matters. Here's the number of recovered. which continues to go up. The recovered, more than half of the people who have contracted coronavirus have recovered fully. So nice to see, and it's tracking on higher. Great. But this is the chart down here below that matters the most. These are the number of new cases outside of China. And what's happening this week and last is we're starting to see it move into a parabolic type of form. And that is very concerning. We can see on this map that the coronavirus cases have jumped and popped all over the place. There are not many places in the world where it hasn't touched here just yet. In fact, where I am in Salt Lake City, we've now seen a case come in, but it is one where the spread is increasing, and the flu virus, you could argue, is more deadly. But the fear and the panic and the change in activity by people around the coronavirus is much more significant than the flu virus. For example, my sister-in-law, their work, they banned visitors. Visitors are no longer allowed to come in. Why? Well, coronavirus. Is it logical? Well, I think you could make a pretty good point that it's not. But at the same time, the fear is palpable. The fear is there, and it is changing people's behaviors. My wife, she loves to go wander stores. That's one of her favorite things. She just likes to wander. It's one of her releases. And we sat down this week and talked about it, and just, hey, can we curb that just a little bit for the next little while, just in case. Not that there's a huge sense of panic or anything, but just in case. And it is changing people's behaviors, and some more so than others. I know for us here where we are, the behavior change isn't all that great. But when you go and you look at areas of China, you start to look at what's happening in areas even in the U.S., there's a slight behavior change that's happening. Are people booking flights? Are they booking cruises? Are they going to Disneyland? No, the numbers are going down. And so that economic impact matters. And as long as the number of cases continues to grow exponentially, we'll continue to see that pattern of behavior come into play. So, to me, the three most important charts. And this chart doesn't have to, this chart of new cases doesn't have to, start to fall off dramatically for the market to bottom or anything else like that. But as long as it continues to rise, it continues to kind of go parabolic, the fear component in the market will continue to be pretty hefty here overall. Now, we had a jobs report number this morning, a very solid number, a very good number here for February. It did create about a 20-point rally in S&P futures, but that was erased pretty quickly. But you can see some money starting to come in here today as we see the TLT pulling back. We're starting to see gold pull back. We're starting to see some of the safety sectors, pull on back here this morning, and some buying starting to go into tech, some buying starting to go into some of these stocks like an AT&T that had a very nice kind of V-shaped recovery this week and are getting a little bit of pullback in them. And this afternoon, I'm going to talk about the watch list and some of the watch list stocks that this week's price action speaks volumes to, because there are some stocks out there where the price action this week, while it's been herky-jerky and all over the place, it speaks volumes about what the stock is likely to do going forward. And AT&T is one of those where we'll be able to talk about it, and there's several others that I will go look at. And I'll show you how I'm looking to play them, and how it affects the challenge, as well as how it affects how I want to go in position in some of these names that have kind of tipped their hand here this week. Thanks for hopping on. Have yourselves a fantastic day, and we will talk to you later. Take care.